Joining me here for reaction is University of Maryland economist Peter Morici and also Janney chief investment strategist Mark Luschini. Peter, your interpretation of this report, it seems to me like we got pretty much a ho-hum economy and nothing has yet changed that.
Well, it was ho-hum when you consider it against, say, the economy of the 80s, but when you consider it against the economy of the first quarter, it's darn good. I expect
you
GDP...
got a low standard, my friend.
I understand. I expect GDP to come in about 2.6%. I expect the corporate profit reports over the next couple of weeks will be higher than the first quarter, although year-over-year observations won't be as good. And in the second half of the year, I expect all that stuff to be even better. That profits will be up and GDP will continue to grow.
All right. Well, you know, hey, I'll take it. I'll also take that jobs report we got last Friday. 287,000 jobs being added, Mark, to the economy. Look, I'm going to qualify that by just pointing out it's not enough. We need to be adding 300,000-400,000 jobs just to keep up with population growth. Nonetheless, when you compare it to the 30,000 jobs that we added the month before, 287 is sounding pretty good. When you look at this market and you look at the economic data out there, none of which, let's face it, is all that stellar. Do you still think it's time to get in?
Yeah, I do, Trish. I mean, the fact of the matter is, as you said, it isn't particularly stellar, but it's not bad either. In fact, the Citigroup Economic Surprise Index continues to chug higher. And granted, that jobs report was probably as anomalous as it was the month before. So you have to smooth those numbers out. And over the last 3 months, it's averaging 147,000 a month. That's a downshift from last year's north of 200,000. But it's enough to keep the economy's positive inertia intact. And therefore, I think it remains investable. And so I do expect equities to grind with bouts of volatility higher into the end of the year.
I wonder how much the Fed is contributing to all this as well. I mean, as we all have pointed out, none of the growth is really anything to write home about. Yet when you look around the world and you look at the challenges that Europe is facing, you look at the challenges that Asia is facing, and then you look back here at home and you're like, okay, you know, maybe we can manage to squeeze out some 2% growth for the year. Maybe we can grow 200,000 jobs a month, maybe. Suddenly, we look like the prettiest girl at the dance, Peter.
Well, we do. There are three factors that are really pushing the market up. One is the Fed being so accommodating, and we are the prettiest girl at the dance. But let's not underestimate all this new technology that's coming online that will permit us to increase labor productivity dramatically. For example, in retailing. And I think that that's going to be very significant.
Okay. All right, I hear you, but
and that'll drive corporate profits up.
It drives corporate profits up. Yet we get once again back into this situation where, you know, the investing class is benefiting from low rates from the Fed, from technological gains that make every company more efficient, and yet your average person, Peter, you know, still has to run the risk of getting replaced by that technology in the retail sector.
Well, less and less there's that average person, that person in the middle. There are people that are making smart choices about their lives and don't have to go to college to do it. They become things like, you know, medical technicians or windmill mechanics and things like that. They get a year or two of training. And there are people that make smart choices in college. They major in engineering. And then there are people that make dumb choices. They don't learn anything in high school, and they take art history in college. It's a matter of, do you make smart choices with your life? If you make smart choices with your life, you're going to prosper.
Go to University of Maryland and take Peter's class in economics, and that'll be a smart choice in his view. Good to see you guys. Thank you so much, Mark and Peter.
Thanks,